Hi everyone, it's Ardis Porter here again with Talk About It Tuesday. And I have my friend here, Kyle Caruso with Legacy Mortgage. Good morning.
Good morning. How we doing?
I'm doing great. I'm doing great. How are you?
Fantastic. Beautiful morning. Beautiful weather. Can't beat it.
All right, we're coming to talk about a great product. Everybody knows I am a full-time registered nurse here in Michigan. So a lot of my clients have been clients that I've worked with in the medical field. And we're here to talk about a product like if you're a nurse, doctor, first responder, or other licensed professional, think about home ownership. This interview is one to watch. Kyle's going to break down the Next Edge loan and how it can help you purchase your next home.
There we go.
All right. So let's just get ready to dive in. Can you tell
Jump
us
in.
what the Next Edge Mortgage is and who it is exactly designed for?
All right. So the NextEdge Mortgage, it's a really cool product, and the biggest thing is it's for professionals. It's a long list, so I got to look at it real quick. So it's residents, fellows, nurses, orthodontists, engineers, attorneys, physicians, veterinarians, first responders, dentists, CPAs, educators. So it's a pretty wide net.
Mhm.
But the most common is obviously people in the healthcare physician in the physician industry, there, nurses, all that stuff, respiratory therapists, you name it.
Yes, so it is a lot of professionals, not just medical professionals. So, reach out to Kyle, see if you can apply for this.
Exactly.
Why is this program a game changer for professionals?
The biggest it was a couple things really. So the cool thing about it is it's it's 5% down payment and there's no PMI. So normally, as you know, you have to put down 20% to get rid of that PMI. This program here for all these professions here, there is no PMI. It's 5% down, and the interest rates are so much better because we have you have the opportunity to take advantage of like 30-year fixed. You can do a 15-year, but also you can do adjustable rates too, which is a great time to look into right now with the forecast of rates to obviously go down here in the near future. Why not take advantage of a low interest rate at the moment? So you have that kind of safety net to refinance when these things drop. So biggest thing I like to always say about this loan product is you can't beat it. No PMI, phenomenal interest rates. It's just a win-win for everybody.
That's right. Sounds good. What makes it different than a traditional mortgage? It's just a
Well,
PMI.
the PMI obviously is one, and I know we're probably going to get into it here in a little bit with the student loan stuff, but most of the time with these loans, student loans have to be considered. So if you're doing a Fannie Mae product, you gotta hit 1% of that balance for a qualifying monthly payment. Freddie and FHA is 0.5%. Cool thing about Next Edge is different from these other programs is that if these student loans are deferred for at least 6 months from closing, then we can go ahead and exclude them from the debt to income ratio, which sometimes that could be a lot, especially in the profession, the healthcare profession. It's expensive to go to school. So,
For
there's a
sure.
lot of student loans out there. So that's like, I think probably the biggest thing outside of the PMI, like you mentioned as well. And obviously, the phenomenal interest rates versus like a traditional 30-year fixed.
Those physicians make a lot of money, but they come out with a lot of student debt.
Oh, yes, they do.
So yeah. For someone like a recent nursing school graduate or medical resident with a signed job offer, how does this program help them to qualify?
So the cool thing about that is it's not like, and this is a lot of people here. A lot of folks say like, oh, well, I don't have 2 years in my field, or I haven't had 2 years in my certain employer. That really does not matter, and especially for this program here, if you have like an existing employment contract, that can serve as evidence of income or even future income. We can use that for qualifying. So always get in touch with your lender if you have any questions or uncertainty, but a lot of the times you send them that contract, or you got future income coming up, but you haven't received a pay stub yet, but there is something that shows how much you're getting paid hourly and how many hours. We can use that to qualify. You don't have to wait. So that's what I would say for that one.
Okay, so don't put yourself out, man. You can.
No.
Okay. How does the program evaluate student loans? I know you were getting into that, especially for those that are in deferment.
Yeah, so just to reiterate that again, student loan payments can be excluded from the debt to income ratio as long as they're deferred for at least 6 months from closing. So let's say you have $100,000 in student loans, and Sometimes you have to get hit with a 0.5% payment or 1% payment, and that might, affect that debt to income ratio. If they're deferred, or at least 6 months from closing, they're out of the equation.
Okay. All right. Um, I'm sorry, I'm reading my questions.
You're all good.
Okay. Is this program only for primary residencies or can it qualify for investment properties or vacational?
Negative, Ghost Rider. Investment properties, second homes are no go, unfortunately. Some other, ineligible transactions would, can't do it. They can't do it on manufactured homes or like co-ops, like cooperative properties. Like they're pretty more popular in New York, anyways. But no co-ops, no balloon payments, and then obviously there's no multi-unit either. So those are some of the ineligible transactions for this type of product.
Okay. What's the max loan amount available and what, oh, you already said 5% down payment. So,
Yep, 5% down. Max loan amount is going to be $766,500.
man,
So pretty big.
yeah. And we
You can
talked,
buy a nice house here in Michigan.
that's what I was gonna say. We talked about this last week,
Yeah,
we were talking about, I think around 500 and up. So 740. How much is it again?
766.5. Now that might not get you a nice place in like LA,
California.
but here we're gonna get a nice place.
You're gonna get a nice place. And you better invite us over if you do.
Hey, no doubt. Especially if you got a pool or live on the lake.
That's right. What is the minimum credit score and DTI requirements?
Minimum credit score, you gotta have at least a 720. Again, if you don't have it or you don't know what you have on your credit, I always say just call me because we can run that simulation and say, hey, if you do A, B, and C by this date, your score is going to be this. So there's always ways to improve your credit. So 720 is the minimum requirement for this one, and that's income ratio requirements. They're a little stricter, but not much. And it's on the front end, which means just the house payment versus your income. It's about 33%, and then the back end, which would be your new monthly payment on your new house you're buying plus your debt, and that's 43%. So not too much different than conventional loans, but a little bit less.
Okay. But I do want to point out again something that you're saying here that we kind of like reiterate is don't wait to reach out to the lender when you're ready because you might still not be ready when you think you're ready. Reach out to them when you're thinking of home ownership and they can help guide you. Kyle is expert. He can help guide you, he can help generate what you need to do, what exactly you need to work on, and give you an estimation of the time frame to then when you will actually be ready and can go ahead and get the home you need. So do not wait to
Do
reach out.
not wait. Do
Yeah.
not
Yeah.
jump right in. It's not a big deal. We can do a soft inquiry on your credit. If people are worried about the hard inquiry, but even the hard inquiry with us being a direct lender, it really doesn't affect the score a whole lot. Like we're talking maybe 3 to 5 points. So nothing crazy.
All right. So get ready now.
Yeah.
Can gift funds be used for down payment or closing costs for this loan?
100%. Gift funds can be used for everything on this one here. So, if you are struggling and have a family member or someone that wants to give you that, gift you that money, then you can take full advantage of it for your down payment and your closing costs.
All right, gift
I'm
funds.
up for I'm up for taking some gifts too. If anybody's out there looking to give,
We're always accepting gifts. My mom said never kick a gift horse in the mouth. I won't. So
never, never. I love the saying. I'm gonna start using that.
Um, and then you already talked about the interest rate and the fixed rate versus the ARM option. So
Mm-hmm.
I think we're good there. Are there any special fees or premiums borrowers should be aware of?
No, no. This one it's pretty standard. Honestly, there's nothing crazy or out of the ordinary. You're gonna have your loan origination, and you're gonna have your title company fees, your appraisal, your escrows for property tax and insurance. Now with this program, normally for escrow accounts, like on a regular conventional loan, if you're putting down 5%, you can choose to pay the tax and insurance separate from the mortgage. But this one here, you just got to make anything above 80% loan to value, you got to pay them with the mortgage. So those are maybe some of the fees that could be different, but most people pay their tax and insurance with the mortgage anyway. So to answer your question, really nothing too different here in terms of fees.
Sounds pretty standard.
Yeah.
What advice would you give professionals in Michigan who are on the fence about buying and could benefit from this program?
Get off the fence. That's the biggest thing. You just want to make sure that, like you said, when you're ready to buy, and like say they call you artist and say, hey, I want to look at this house tomorrow, and then you're like, oh, where's your pre-approval? Well, they call me then, and then all of a sudden there's an issue, and then they can't get this house tomorrow. They could be gone. So that problem could have been avoided by them just coming straight forward up front to the lender, saying, hey, this is what I want to do. This is all my stuff that I need to qualify. And then if there is any hurdles we have to get over, we know that sooner rather than later, in that house that you love that comes up in a few weeks, you could be ready for it. So
Yeah,
just get off the fence, give it a shot. It's not going to hurt you. A few moments of your time.
that's right. And like Kyle said, when you call me and want to see a property today or tomorrow, I was gonna say pause.
Pause. Hold up.
Let's see if you're ready. Let's get you over to a lender that can help you. You don't have to come to the office to fill these forms out. We
No,
are
you don't.
25 guys. We will link you by text message or email, however you prefer that communication.
I
And
still have a fax machine too, though, so I don't discriminate against faxes.
so look, there's all ways to communicate. All right, we will figure
Yeah,
it out. And like he said, only take a few moments of your time getting your documents together and getting them sent over to see where you're at.
love it.
All right. And I think we covered how soon somebody should
Yeah.
contact you as soon as you think you're ready. And
Yesterday.
last week. All right. I hope that you guys got a lot of value from this Talk About It Tuesday. If you're a nurse, doctor, first responder, or other professional that's thinking about buying a home, the NextEdge Mortgage from Legacy Mortgage could benefit you. Thank you for watching Talk About It Tuesday. I'm Ardis Porter, your favorite Michigan realtor, and this is Kyle Caruso, your favorite lender with Legacy Mortgage. And we'll see you next week.
See you next week.